All right, guys. Hope you guys are having a good day. So today is a Facebook Q&A. There's some questions. I've gone around and asked a few questions to people, and look to see what everyone is like kind of struggling with. And I've got a list of about 5 questions here. The thing about trading is, like just life really is when you're going through a problem, it's front of mind. It's right in your face. Every day you wake up, you have this issue. You're thinking about it 24/7. But as soon as you kind of overcome the issue, after a while, it kind of becomes like a distant memory. So I love speaking to clients. I love speaking to my clients every day because it reminds me of the issues that everyone else is facing. So I'm not blind to it, right? So that's why I've gone around to like ask some questions to my audience, I guess, and to you guys. And I've got a list of 5 questions here. So it's just gonna be like a quick one, right? It's not gonna be like a long. I'm just gonna give you like the meat and potatoes of what I think the best way for you to solve this problem. And if you guys in the chat as well, if you got any questions, if you're watching this in the replay, you feel free to put like up your question as well, and I will go through that in the next Q&A. All right. So question one. Question one by Dustin. Should I give the surname? Nah, fuck it. All right. So Dustin says, how to know when to reinvest your winnings versus when to just withdraw your profits. Okay. Right. So when do you take money out versus when do you just leave it in there? Well, if you're just starting out, depending on how much capital you have, I don't believe this is a question that needs to be asked if you're still building your account. Trading is a long-term thing. Like most people, they think they can come in and over a few weeks, they can make enough money to pay their rent, pay their mortgage, pay their car note, that kind of stuff. So that's like the delusional talk. Not saying the question is delusion, it's a very good question, but you shouldn't even be thinking about withdrawing money for the first few, maybe even years, right? But if you get to the point where you've made enough money in your account that you are comfortable actually withdrawing money, I would say you should think about 2 things, okay? So trading is about capital conservation. What do I mean? So if you're looking to make a certain percentage every month, right? Let's say you're looking to make like 5% a month. And to make 5% a month, it is very difficult for the majority of traders. You'd have to expose yourself a lot, right? To be able to make 5% a month. Like let's assume 5% a month on a 20 grand account. How much is that? I don't know. A grand, right? Is it? Yeah, something like that. So what you should be thinking about is more like capital conservation. So what if you're risking like 10% or 30% of your account to make 5%, what you should be thinking about mostly is how you can compound that account to the point where you're not risking that much anymore to make the same 5%, right? So what do I mean by that? So if you're risking like 10 grand, like if you say like let's say for instance, you're risking your overall risk in a month or in a quarter to make that 5% every single month is about maybe like you get into like a 20% drawdown just to bring it back to 5% because you're over leveraging yourself. If you have a small account like £1,000 and you want to double your account every month, you're over leveraging yourself. I think that's a better example. If you're over leveraging yourself to make a ton of money because you need to withdraw money to pay your car note, then you're kind of going to be in survival mode for a majority of your trading. What you should be focusing on, if you want to be making a grand every month, what you should be focusing on is reducing the drawdown, right? So you're risking less. So take a £1,000 account that needs to make £1,000 this month and then the following month, right? You're risking 100% of your account to make 100%. Now compare this to someone who has $100,000 account. Now I'm not saying everyone, most people don't have access to 6 figures to trade with, but that's where learning the skill comes in, because if you have the skill, people will throw money at you just to have you trade with their money. Look at like prop firms and all these kind of challenges and that kind of stuff. Maybe not the best, but it's a good place to start, right? So if you have like $100,000 account and you're looking to make 1,000 each month, you're not risking nearly as much as someone who only has 4 figures in their account, right? So second thing is, what are you comfortable with risking every, in your account? For me personally, I'm not comfortable risking more than 30%. Like, I'm not comfortable being or exposed more than 30% of my account. So what does that mean? Like, if you look at my numbers, if you look at my back testing results, if you look at my forward testing results, if you look at my trading results, I never go below 30% of my account. Now, is 30% of your, is 70, is the rest of the 70% enough to get you to a place where you're actually making enough withdrawals? I do not know. Now, that number is different for everyone. Some people are super, super aggressive and they can go 70% in the red and they're super comfortable with it. I'm a very conservative trader. So when my accounts start getting to that 25, 30%, something start rattling off in my head and I'm not okay with it. That's why I'm super conservative. But it's also fine because the bigger account you have, you don't have to risk that much. I barely get down that low. Now, this is super technical question, and it's not really something I can go into deep into this Q&A because there's a lot of numbers that need to be crunched. But yeah, that's the first thing you should be focusing on, like building an account to the point where this is not even a question that needs to be answered because you're just bringing in so much money, like you can withdraw as much as you want. Like if you have a 6-figure account, withdrawing for most people in the world, withdrawing at 4 figures every month it's easy peasy, right? Like most people are okay with 2, 3, 4, 5 grand a month. Okay, forget about all this pie in the sky, buy a Lamborghini kind of trading bullshit. Just focus on getting the skill, and then focus on leveraging someone else's money to the point where you don't even have to think about reinvesting anything because you're trading someone else's money, ergo profit. And then your withdrawals are minimal compared to how much you're bringing in and how much you're risking, right? So yeah, that's Dustin's question. Now to the second question. Again, guys, if you have any questions that are going forward, if you guys are live, no one's live, no one has any questions right now. But if you're watching this on the replay, again, by all means, put it in the chat, and I will deal with it in my next Q&A. So Joe is asking, what did you do / how did you transition from a break-even trader to a profitable trader? Deep. Okay. So trading is one of the best forms of self-development because there are so many things. It's like one of those things. It's like one of those. It's like if you're watching a movie and there's like a jewel. Have you ever been watching like an Indiana Jones movie, and there's like a jewel on the other end of like a very safe-looking bridge, but as soon as you try to walk that bridge, something bad happens. A monster jumps out of nowhere and grabs you, or the floor gives off from the underneath you and just swallows you up. That's how I view trading. Like most people know exactly what to do to get results in their trading. Very, very, very simple. It's not easy. It's not the same thing. It's very, very simple, but it is not easy. So for you to get success in this industry, you have to first of all develop yourself. Like you have to have a different personality. You have to have a different mindset. Your ego needs to be retransformed. You have to die first. You have to kill your ego and then get a new one. So things like greed and fear and just, I need to make money right now. This type of mindset, what helped me back for the longest time wasn't the technique, wasn't the technicals, it wasn't the risk management. It was my mindset, right? It was the way I thought about trading. I looked at trading as more like a fun game that I could play because, you could just get in there, get some money and get out. I didn't see it as a business. I didn't see it as a way of life. I didn't see that something I could do long term. I just thought I could just do it short term and then just get some cash and get out. But obviously, the reverse is always the case because if you think you're going to come into this industry and take money from the market and run away, you've got another thing coming. You have to pay your dues first. So what I would say is, well, first of all, I had to learn the skill. I had to put in the time. I had to put in the effort. I had to put in the resources. I had to get a mentor. I had to be serious with it, back test, forward test. I had to familiarize myself with the way of the market. And most importantly, I had to have fun doing it. I had to enjoy what I did. People think, oh, let me just come in and get money. But then when you say, well, you kind of have to when you say you have to put your trades up on a platform because you need to journal your trades for the future because you need to get better. That's boring shit. Nobody wants to do that. When you say you have to backtest your results, or you have to backtest that currency pair you want to put in your portfolio, that's weeks of boring, mundane stuff. Nobody wants to do that. When you say you have to forward test, nobody wants to do that. When you say you have to be patient and build an account, build a small account, nobody wants to do that, right? When you say, oh, you have to invest in a mentor to show you how to do it properly, nobody wants to do that. You'd rather just invest $200 every month for years rather than paying someone a lump sum to actually show them how to do this. So it's more like a short-term mindset, and it's more like a self-development thing. You have to get to a place where you realize, okay, this shit I've been doing for the last 5 years, that's cost me thousands and thousands of dollars. It's not working. I need to do something different. I really, 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 really want to do this properly. So I'm going to invest the time and the effort and the money and get someone and back test and forward test and actually love and enjoy the process of every day grinding to get better at this because I take pride in what I do rather than just, oh, I'm just going to come in and click a few buttons and hopefully I'm lucky and I can take a few down. The worst thing that can happen to you in this industry is for you to not know what you're doing and find success, because it's got you now. Like that's literally like the addiction to gambling. If I keep looking over onto my left-hand side, it's because I've got the screen here in case anyone asks a question. I'm really trying to figure out this whole Zoom thing. So I've got like two systems here. I've got like a laptop in front of me and I've got my second screen for trading. But now I've got my Facebook Live on there. So if you guys want to jump in and ask a question, I can see you. But yeah, so if you come in and you make some money, that's literally the market has you now, because now you think you can make easy money. So if you invested $20 the first time, then the next time you're putting in everything. You're selling the house, the mortgage, selling the cat, and you're just dumping it in there. And then it will just pull the rug from under you, just like an Indiana Jones. So what I would say is be patient, invest the time, effort, and money, and do it properly. There is no secret, bro. Just do it properly. Do what you know you should do. And maybe you don't know how to trade now. Maybe you're not good enough to make money, but you're always good enough to start getting better than you are now. Right? So there's no one thing, bro. It's self-development. It might take you years to do this, but if you're doing this for a lifetime anyways, you might as well, because the years are gonna pass anyways. If you're not uncomfortable spending years learning this, then this is probably not for you, because you'll have the mindset that you just want to come in and take money and get out. And the market is undefeated. All right, Joe? Cool. So Ellen asks, how are you? I'm good. Most importantly is risk management and scalping. Risk management and scalping. Okay. So I did a bit of scalping like a decade and a half ago. But I've got clients who day trade and scalp, right? Now, the fundamental difference for me personally anyway, between scalping and, let's just say day trading and swing trading, because I'm a swing trader, right? So I don't scalp or day trade. Not that I can't, it's not my personality. So I'd say that's the core difference. I'm not sure what the question is. Most importantly, risk management and scalping. So for me, scalping is not really the way I trade. Don't really get the question here. But I think the key difference, I'm just gonna say the difference between the swing trading and scalping is just time frame and temperament. So most people who gravitate towards scalping are people who have a very low threshold for pain. So swing trading has its ups and downs, and scalping has its ups and downs as well. The bright on the upside, you can take your profits are coming in every day and the losses are coming in every day. So the pain threshold they have to go through is less. But with swing trading, it allows you a lot of flexibility, a lot of time to do whatever else you want to do. Maybe you have a job or that kind of stuff. And I love my free time. So I get into swing trading. And then risk management, I'm guessing you're asking, how do you do risk management? I have a video in this group as well that goes very in depth. If you go into the guide section, if you need me to link it in this video and let me know, I'll drop the link as well. So it goes into details about the things that you need, because sometimes people do risk manage. The reason why risk management is very, very tricky it's not necessarily because what you're doing is not working, it's because you don't believe in what you're doing, right? So when stuff is going well, you're feeling so confident. But the issue with that is when stuff starts going so well, so when stuff starts going bad, you lose confidence just as quickly as you gain confidence when they're going well. So for example, the last couple of weeks or the last 2-3 weeks, it's been a bit tough for me and my clients, right? Like we've been in a drawdown, I'm not gonna lie. It's been a kind of like a sideways movement. We've been in a drawdown and then we kind of came back up and then we kind of came back down and we're just kind of like consolidating as it should. That's how the market moves. Like there's a peak, there's a retracement, and there's a peak, there's a retracement. The issue is most people don't know how long this retracement is going to be. And this is where a lot of people fall off. This is where they start doing stupid shit. They start moving stuff around and then this just keeps going. Rather than, let's say this is going to stop here. They start moving stuff around and it just keeps going down. They start moving more stuff around and it just keeps getting worse and worse and worse. So what I would say is watch that video. It just talks about the things that you need to have confidence in your trading. Again, comes back to the whole back testing results. If you have your back testing results, you know exactly what a drawdown looks like. If you look at your back testing results and you say, okay, well, historically speaking, if I traded these 4, 5, 6 currency pairs, the worst case scenario for a drawdown for me is 7 trades or 10 trades or 14 trades. So that way you can manage your risk. If you go back to a few 10 minutes back and I talked about what's your threshold, how much are you willing to go in the red for you to not be comfortable anymore? For me personally, that was 30%. So I do the math around what my drawdown is per pip, right? You do the drawdown per pip, and then you do the drawdown and the number of trades that it will take you to get out of the drawdown. So let's assume if it will take me like 12 trades to get out of a drawdown, I make sure that I engineer, and again, go watch that video because he explains it. I engineer my money management to a place where I can't lose more than 30% on that drawdown before I crawl out of it. And again, I make sure that I don't do anything stupid while I'm in that drawdown. I stay calm and I do what I'm supposed to do to get out of it. Okay. So go watch that video and it should be it goes a lot more in depth. What is the best way to scale into and out of a winning position for maximum profit? There is no maximum profit if you're scaling in and out of a position. That's the downside of taking partial profits. You're never going to be able to take full profit at the end of it. If you're closing half of your position, right, and then the position goes on to target, you're never going to have the same amount. So if you're trading with if you're risking 20 to make 40, and then halfway through you close the first 20, right? So it's a 2-to-1 risk to reward. So this is very simple math. You don't need to watch a video for this one, or even though I have a video, which I will tell you which one it is. So if you're risking $20 to make $40, 2-to-1 risk to reward, right? And then the trade moves halfway through. So now you've made $20 and you close half of that. Okay, so now you've closed the $20. Now you've cut your position size in half. Now you're only trading with $10. So the next half is only going to bring you in $10. So that's basically the maximum profit in my experience that you can take out. Now, what advantage does this have? The advantage would be if after you've closed the 20%, the halfway through the trade, you've closed your 20%, and then the market reverses and takes you out for a stop loss, at least you now have 20%, right? Or at least you have 20% minus the stop loss, which is about half of that. So at least you have 10%. I don't know if anyone understood that, but if you don't understand it, again, go watch my mini course. If you don't know what the mini course is, let me know in this comment. Let me comment in this video if you're watching in the replay, and I will drop you the risk management and how to scale in and out, and the exact technique I used when I was doing this scaling in and out method as well. I don't do this anymore because why would you do it? Like if you know what the numbers are, like I've done my back testing results, I might as well just stand my ground and take full profit. Like grab your balls, mate. Like you don't need to scale in and out. But if that's what you want to do, hey, go for it. I did that for years, and I still recommend that trading strategy, right? Because it works. It makes money. Won't make you as much money as if you stayed in the trade, but it makes money, hands down. So go watch that video. Go let me know if you need the link. It is my mini course about trend advanced pattern trading. So back patterns, ciphers, Gartleys, butterflies, that kind of stuff. It is the best when it comes to scaling in and out. One, because there are just so many patterns that appear in the market, and you can actually automate it as well. Okay. Okay, so this is a 2-for-1. So this is about trend trading, how to identify a trend. This is very simple. I've made tons and tons of videos on this. No one knows when a trend is starting. No one can see the future. The market faces out all the time. All we do is predict, but we don't know. Now, having said that, I can show you how I know. Okay, let me just share my screen here quickly. Okay, now let me just use this example of a trade I took with my clients a couple of days ago. So again, okay, so when I'm looking at a chart, the first thing I do is ask myself, what is the market currently doing? It's very simple. I keep it very, very simple. I'm doing one thing on this daily time frame, because again, I swing trade. So my higher time frame is a daily chart, right? So if you look at this chart, I think it was the dollar yen, yeah. Let me see the dollar yen. That's where we took a trade. Yeah. So if you look at this chart here, there's two ways you can figure out what the market is doing. The first is ask yourself, well, which way is the market leaning? Right? If the market is going from the bottom left to the top right, and sometimes it's not that simple, so bear with me, that would be an uptrend. If the opposite is the case, and we go in the opposite way, that is a downtrend. Now, that is an oversimplification, right? Now, how do you identify a trend? It's just, again, to look at the highs and the lows. If you look at this chart and you just scrunch it up, right? If you just scrunch up the chart, you can see very clearly how the market has been trending. The trend is very clear. There's a new structure high, there's a retracement. That's just how the market moves. Retracement, retracement, retracement. And every time we retrace, you notice we kind of retrace sometimes back into the previous structure support, right? Like this is the best place that you can look for a market to either break or bounce. You can see market, we put in a new structure high here. We retraced, we came back. Remember, this is the daily chart, so these candles are like a daily chart. You can see the market came back, hit that ceiling again, retraced again, and then broke through, retested, broke through, retested. Where do we retest? Previous structure support. Broke through to the upside, came back to retest. Where did we retest? Previous structure support. You can see we broke through to the upside again, came back to retest. Where did we retest? Previous structure support again. You can see it. You can see the test here. You can see the test here. And you can see finally the test here. So essentially, I'm just looking for a new structure high outside return or retracement, new structure high retracement. So that's how it goes. So that's a new structure high retracement, new structure high retracement. So kind of this three shape. Or if it's like a downtrend, new structure low, retracement, new structure low, retracement. Kind of looks like a three. So when I see this three, that means a new trend has begun. That or a break of the previous structure. So in this case here, you can see the three is here. There's a new structure high, retracement, new structure high, retracement. This is getting a bit messy now, but hopefully you get the point. So that's the first way I identify a trend. And the second way is when there was a previous trend. So if we scrunch up this chart now, you can see there was a previous trend here. And you can see, as I mentioned, it's going from the top left to the bottom right. So this was a bearish trend. You can see there was a new structure low retracement, new structure low retracement, new structure low retracement, blah, 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 retracement, blah, 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 retracement, blah, 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 retrace. And then right here, market retraced back into the previous structure, but this time we didn't get a new structure low. So there was a retracement back to new structure high. But instead we had a break to the opposite side. And now this break here is my sign that the market has turned. Now, to confirm that the market has turned, obviously, I still need a retest and a reason to get in. But if you are still not sure if the market has turned from a bullish to a bearish, from a bearish to a bullish trend, all you got to wait for is for the market to retrace and give you that new structure high. So in this case, we went from a bearish trend to a breakout to then a three-shape new structure high. And you can see this kind of continued until, let's just go to the 1 hour, which is where I take my trades. This continued into, and you can see sometimes it doesn't look as clean. It looks very ugly sometimes, but the ugliest trades are the best ones. You can see the market had a new structure high. If I just grab my tool here again, we had a new structure high. We had a retracement. We had a new structure high. We had a retracement back into where? That previous structure support. You can see it right here. And then I found my reason for entry. Now we can't just enter blindly, right? Found my reason for entry, and then which is a higher high, higher close. I call it the H3C. The market is oversold as well. This is my entry reason, always, or a double bottom. Didn't get a double bottom, but a H3C is fine. A good risk to reward, a 1.6 to 1 risk to reward. And then a very nice 186 pip winner. So that's what I look for when I'm looking to get into a trade, ladies and gentlemen. But again, it's oversimplified because I do this because I have confidence in what I'm doing. I've been doing it for so long. It's absolutely fine. I'm very confident to take the trade a million times, even though the previous ones I've taken, again, the past couple of weeks, we've been taking a beating. But the next trade came along and I did what? I took it anyways, right? So again, I have videos on this. If you have any more questions, guys, I am obliged to help. I am here. That's why I created this group, because none of this was available when I was learning. So, and it's kind of fun to kind of see what people are struggling with, because every trader is a little bit different. Everyone has their own issues. So guys, even if you're watching this on a replay, and you got any questions, just go ahead and put it in the description and we will tackle it in the next video. All right. All right, guys, just a quick one. I'm going to go enjoy the sun before it goes away. And I will see you guys in the next one.